In terms of gold and silver, look, if I had one trade, it might be gold only because it was reclassified the world's only other tier one asset by the Bank of International Settlements, which is the most powerful bank on the planet. Yet, I think silver is the trade of a generation. If I had two trades, I'd buy silver maybe with the intention of down the road when the ratio between the two correct, trading it back into gold. Interesting thing about silver I'd like to mention, the Silver Institute came out with their numbers recently and said 185 million ounce shortfall this year, over 200 million last year. But in it, it's very conspicuous.
Silver has a more aggressive positioning profile, rightfully so, as it is a higher beta product in general. Like gold, net speculators have increased their position size over the last 3 weeks, which is outright bullish. But open interest since March 11th has increased throughout the price advance. This means the initial price advance was not the result of a short squeeze like gold, but from organic bullish intentions for the contract. Distinguished financial analyst Andy Schectman, president and owner of Miles Franklin Precious Metals, emphasizes the enduring relevance of gold during current market volatility. From Andy Schectman's perspective as a seasoned analyst, he states gold's Tier 1 asset status while advocating for silver as the trade of a generation. Concurrently, he proposed a strategy of initially investing in silver and eventually trading it back into gold as the metal ratio adjusts. The silver market is expected to witness another substantial deficit in 2024, amounting to 215.3 million ounces. According to Metals Focus, that would be the second highest in over 20 years. While near-term price weakness remains a possibility for silver due to speculative inflows into gold and short-term downside risks, the outlook for the year's second half is positive, driven by expectations of looser U.S. monetary policy and sustained investor interest in precious metals. Delving into the intricacies of the silver market, Schectman discusses counterparty risk and rehypothecation, emphasizing silver's critical role in high-tech weaponry. He questions commercial banks' significant short positions in silver futures, hinting at a potential connection to the military-industrial complex's interest in suppressing silver prices to facilitate weapon production. Schectman's insights underscore the complex dynamics in the precious metals market, where factors such as supply deficits, monetary policy, and geopolitical considerations intersect to shape future trends. Now, we present the clips of Andy Schectman's insights from his recent interview with Robert Kiyosaki on the Rich Dad channel. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
In terms of gold and silver, look, if I had one trade, it might be gold only because it was reclassified the world's only other tier one asset by the Bank of International Settlements, which is the most powerful bank on the planet. Yet, I think silver is the trade of a generation. If I had two trades, I'd buy silver maybe with the intention of down the road when the ratio between the two correct, trading it back into gold. Interesting thing about silver I'd like to mention, the Silver Institute came out with their numbers recently and said 185 million ounce shortfall this year, over 200 million last year. But in it, it's very conspicuous. They do not mention silver in the military industrial complex at all. No, there is no military breakout. 2 years ago, I gave a speech in Vancouver, the same place I saw you last time at Jay Martin's Vancouver Resource Investment Conference, one of the best, one of only two I go to conferences all year. Everyone should check him out. He's a mutual friend of ours and a great dude. And in it, I said, there's 500 ounces in a Tomahawk cruise missile. And a guy came up to me. He sent me this cup. He says, I work for the Department of Defense, and I actually helped design the Patriot missile. And I know there's silver in it. I just don't know how much. Well, last time we were there, when I saw you last, he came up to me after my last speech, and he said, you know what? You were right. There's about 14 to 15 kilograms in the tip of a Tomahawk. And he showed me all sorts of pictures, said, don't worry, this is all declassified. And we talked for an hour. He texted me a couple days ago. I got to get back to him and talk some more because they didn't list it in any of the supply demand fundamentals. So when you think of all the missiles, high-tech missiles, not just Tomahawks and aerospace that need silver, and ask yourself, why would a commercial bank like Bank of America be short 1 billion ounces, naked short of silver? Why was JP Morgan so short? Why did JP Morgan pay a $920 million fine for suppressing the market and is still allowed to be the custodian of the world's largest silver trust? The largest fine the Justice Department ever issued, and yet they're still allowed to do it. The point of it is the military industrial complex holding the price of silver down so they can create all of these high-tech weapons to sell all around the world, to fund the continuation of war all around the world? Could it be that simple? I don't know, but ask yourself, if indeed it was confirmed by this gentleman, a DOD consultant who said, yes, there is that much in a Tomahawk, think of all the missiles and ask yourself, why is it not in the supply-demand fundamentals? And then ask yourself, why would a handful of commercial banks hold the largest concentrated short position in any commodity traded on COMEX found in silver? It makes no sense until you just take a step back and say, could that be it? Fine line between conspiracy and reality. I'll let you all decide. But in my mind, absolutely why they are allowing these commercial banks to suppress silver in order to fund the military-industrial complex's efforts. And who is the military-industrial complex? I don't know. Is it BlackRock and Vanguard? They own everything, including the ETFs. Could it be them? Maybe. Don't know. I'll let you all decide. When you talk about the counterparty risk in silver, and it is getting scarcer. So if you think you own, for example, a COMEX contract of silver, which is 5,000 ounces, currently the registered category is rehypothecated. Those are the bars that are on COMEX that people hold contracts that they think they own, they can take delivery of. It's rehypothecated roughly about 1,800%, meaning if everyone stood for delivery, 17 would get cash, one would get the bar.
You got to explain what rehypothecate means.
It just means selling the same asset over and over and over and over and over and over again because of the leverage. Most people never stood for delivery, ever. And when they developed the COMEX market, they figured, here's how we can do it to them. What I mean by that is that if I buy a COMEX gold contract to hedge my inventory, I just have to have about $8,000 in my margin account. The trade's $15 or less. The $8,000 in my margin account, as long as the price doesn't go against me, allows me to control 100 ounces of gold. Now, I could stand for delivery, but that's what I mean about pretend to pay for it. Now, they can pretend that I own it by selling that same contract.
During the interview, Andy Schectman suggested diversifying a portfolio with Bitcoin and gold could enhance its strength. He emphasizes the legitimacy of central banks buying gold at unprecedented levels and advocates for allocating profits from cryptocurrencies into stable assets like gold. Concern about the rapidly rising U.S. government debt is partly behind recent surges in gold prices and Bitcoin, even as the Treasury market so far remains relatively optimistic about the country's fiscal path, market observers say. He points out the need to roll over trillions in treasuries amid diminishing foreign holdings, raising questions about who will finance this burden. Schectman also critiques the U.S. government's inconsistent international relations approach, expressing concern about global resentment towards perceived hypocrisy. Let's get back to the interview.
I think anyone's portfolio that is rich in Bitcoin would be stronger if some of the profits were put into gold. You're hedging your bet. And I'll simply say this, that since I last saw you, I've been buying it along with gold and silver every 2 weeks. And that's new to me because I don't want to miss out on it. And I don't want to miss out on what could be a global trend. But, it's never really been my focus. But I'm open-minded enough to add little bits of it on a habitual basis. But you're right. I mean, I think that if you look at the central banks of the world, which are the most well-informed traders, forget about how wealthy they are. They've been buying gold at a level the world has never seen before. So there is legitimacy to taking some of the profits in cryptocurrencies that people have made a fortune and put that into something that's stable and that the biggest money, smartest money, most well-informed traders in the world are buying. It doesn't have to be, they don't have to be mutually exclusive of one another. I think your portfolio becomes a hell of a lot stronger. As you've been recommending for years now, having allocations to all three, instead of just only looking in one direction, broaden your horizons, you'll probably end up having a stronger portfolio. All of that's true. I mean, our debt is going up to the tune of $1 trillion every 100 days. It took 200 years to do it the first time. We are adding debt at a level that is unsustainable. We have $9 trillion in treasuries that need to be rolled over at higher interest rates this year alone. At a time when the world is selling treasuries, China is down to just over 700 billion. They were at 3 trillion not too long ago. Obviously, Iran and Russia, they sold all their treasuries. Saudi Arabia is lowering their treasury amount. Japan is. So as all of these countries are shedding treasuries, who's buying them, including the Federal Reserve, the number one holder of our debt? rolling them off their balance sheet. So who's going to finance the 10 or 11 trillion dollars every year for the next 10 that we have obligations towards to roll over at higher interest rates? Who's going to finance this irresponsible spending that we have? You mentioned the Ukraine. We've given them $200 billion, Robert, since February of 2022 with no congressional oversight, yet $5 billion to build a wall to protect border states like Arizona and Texas. Well, that's just too much. And President Trump should have been vilified for that, right? And so we are misplaced. We're borrowing money to give to a country instead of taking care of our own borders, where the Senate, after voting for this, is cheering and waving Ukrainian flags. And then at the same time, you have our Treasury Secretary, Janet Yellen, 3 weeks ago in Brazil, the B in BRICS saying, sanctioning Russian $380 billion in Forex reserves, that's not enough. We need to confiscate them. I believe they vote on that tomorrow, to confiscate them. And they're going to not just sanction, but confiscate their assets. And then you had her just this week on Monday, or maybe last week at the end of the week, do an interview with CNBC threatening China. If you aid Russia and their military, and again, C in BRICS is China, and if you aid them, we have no problem with you being friends. Thanks, Janet. That's cool. But if you aid them in any way towards their military efforts, we will sanction your companies, your banks, and even Beijing. So it's okay for us to give $200 billion to the Ukraine. But if you do it, we're going to sanction you. And now they're threatening to sanction Pakistan for wanting to build a pipeline for oil between Pakistan and Iran. These sanctions are what is creating the resentment and the view that we're very hypocritical around the world.
According to the Silver Institute, after a strong start to the year, silver should remain supported by record industrial usage and a supply deficit. As more central banks start beefing up their portfolios with gold and worries grow about Uncle Sam's spending habits, gold and similar stable assets are going to stay in the limelight. Moreover, international relations and geopolitical tensions could drive investor interest in safe haven assets like gold and Bitcoin. How do you envision the role of gold and Bitcoin in your investment strategy amidst rising concerns over government debt and global geopolitical tensions? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.